Welcome to our channel, where we explore the fascinating world of finance and economics. Today, we're going to take a journey back in time to ancient Greece, where we'll discover the surprising ways in which their economic system can inform modern financial innovation. Let's get started. Ancient Greece was a hub of economic activity, with a system that was surprisingly sophisticated for its time. They used coins, established trade routes, and even had a form of banking. But what can we learn from their economic system that can inform modern financial innovation? Let's dive into 10 key features of ancient Greece's economic system that can provide valuable insights for modern financial innovation. 1. Decentralized banking. Ancient Greece had a system of decentralized banking, where temples and other institutions provided financial services. 2. Commodity-based currencies. They used commodity-based currencies such as gold and silver coins. 3. Trade routes. Ancient Greece established extensive trade routes, facilitating international commerce. 4. Marketplaces. They had vibrant marketplaces where goods and services were exchanged. 5. Taxes. Ancient Greece had a system of taxation, which funded public goods and services. 6. Public-private partnerships. They collaborated with private enterprises to deliver public goods and services. 7. Risk management. Ancient Greece developed sophisticated risk management strategies, such as insurance and hedging. 8. Financial regulation. They had a system of financial regulation which protected consumers and maintained stability. 9. Innovation. Ancient Greece encouraged innovation, with inventions like the Antikythera mechanism. 10. Education. They placed a strong emphasis on education, which helped to develop a skilled and knowledgeable workforce. So how can these features of ancient Greece's economic system inform modern financial innovation? Let's explore some examples. Decentralized banking and commodity-based currencies have inspired modern cryptocurrency and blockchain technology. Trade routes and marketplaces have evolved into global supply chains and e-commerce platforms. Taxes and public-private partnerships continue to play a crucial role in funding public goods and services. Risk management and financial regulation remain essential for maintaining stability and protecting consumers. Innovation and education continue to drive progress in the financial sector. Let's take a moment to explore how the economic system of ancient Greece influenced the Roman Empire. The Romans, known for their practicality and ingenuity, were quick to adopt and adapt Greek financial practices to suit their own expansive empire. Firstly, the Romans borrowed the concept of decentralized banking. Roman bankers, or argentarii, operated similarly to Greek trapezites, offering loans and managing deposits. This facilitated the flow of capital throughout the empire, fueling commerce and infrastructure projects. Additionally, the Romans were inspired by the Greeks' use of commodity-based currencies. While the Greeks used silver and gold coins, the Romans expanded this system by minting a variety of coins, including the denarius, which became a staple of Roman trade. This diversification helped stabilize the Roman economy and supported their vast trading network. Trade routes established by the Greeks were also adopted and expanded by the Romans. The Romans built an extensive network of roads and sea routes, enhancing trade and communication across their empire. This not only boosted their economy, but also helped in the cultural exchange between different regions. Moreover, the Romans took Greek economic theories and integrated them into their own legal and administrative systems. This included property laws and commercial contracts, which provided a robust framework for economic activities. In summary, the Roman Empire's economic success was, in many ways, built on the foundation laid by ancient Greece. By adopting and enhancing Greek financial practices, the Romans were able to create a thriving economy that supported their expansive empire. Let's delve into the intellectual roots of ancient Greece's economic system by exploring the contributions of its philosophers. Figures like Aristotle and Plato didn't just shape political and ethical thought, they also laid the groundwork for economic theory. Aristotle, for instance, offered profound insights into the nature of wealth and trade in his works. He distinguished between oikonomia, the management of the household, and krematistics, the art of acquiring wealth. Aristotle criticized the pursuit of wealth for its own sake, arguing that true wealth lies in the ability to meet one's needs and live a good life. His ideas on the value of goods and the morality of trade influenced later economic thought and continue to resonate today. Plato, another towering figure, introduced the concept of an ideal society in his work, The Republic. He discussed the division of labor, emphasizing that individuals should specialize in tasks that suit their abilities. This specialization, he argued, would lead to a more efficient and harmonious society. Plato's ideas on the role of the state in regulating economic activities also laid the foundation for later debates on government intervention in the economy. These philosophical contributions were not just theoretical musings, they had practical implications. Aristotle's and Plato's thoughts influenced the economic policies and practices of their time, shaping the way people viewed wealth, trade, and the role of the state in economic life. As we continue our journey through the economic legacies of ancient Greece, it's time to explore an era that saw a remarkable revival of Greek thought, the Renaissance. The Renaissance, spanning the 14th to the 17th century, was not only a period of artistic and scientific flourishing, but also a time when Greek economic principles were rediscovered and reintegrated into European society. During the Renaissance, scholars and economists turned to ancient Greek manuscripts, translating and studying the works of Aristotle, Plato, and other philosophers. This intellectual revival had profound implications for economic practices. One of the key Greek contributions that influenced the Renaissance was the concept of oikonomia, the efficient management of resources. This idea was mirrored in the burgeoning mercantile practices of the time, as European city-states began to emphasize the importance of trade, resource management, and economic planning. The division of labor, as discussed by Plato, also found new life during this period. Renaissance thinkers recognized that specialization could lead to greater productivity and innovation. This idea was crucial in the development of the guild system, where craftsmen and artisans honed specific skills, leading to higher quality goods and more efficient production processes. Moreover, the Greek emphasis on ethical considerations in economic activities, particularly Aristotle's critique of wealth accumulation for its own sake, resonated with Renaissance humanists. They advocated for a balanced approach to wealth, one that promoted not just personal gain, but also the common good. This perspective influenced the economic policies of many Renaissance states, which sought to balance private enterprise with public welfare. The Renaissance also saw the revival of Greek-inspired institutions such as public markets and banking systems. The ancient Greek agora, a central public space for commerce and social interaction, inspired the development of bustling market squares in Renaissance cities. Additionally, the principles of Greek banking, which included the use of loans and credit, were adapted to suit the expanding economies of Renaissance Europe. In summary, the Renaissance was a period of economic transformation deeply influenced by the revival of ancient Greek thought. The principles of resource management, division of labor, ethical economic practices, and institutional innovations were all drawn from the rich legacy of ancient Greece. These ideas not only shaped the economic landscape of the Renaissance, but also laid the groundwork for modern economic systems. We bridge the ancient with the modern by examining the relevance of ancient Greece's economic principles in today's digital economy. As we navigate through the complexities of modern financial technologies and practices, you'll be surprised to find striking parallels with the economic wisdom of ancient Greece. Ancient Greece's emphasis on the efficient management of resources, or oikonomia, finds a new avatar in the digital age. Today, we see this principle reflected in the optimization algorithms used by tech giants like Amazon and Google to manage vast inventories and streamline operations. Just as the Greeks sought to maximize resource utility, modern companies use data analytics and machine learning to achieve unparalleled efficiency. The concept of the division of labor, championed by Plato, is more relevant than ever in our globalized world. Gig economy platforms like Uber and Upwork exemplify how specialization can lead to greater productivity. Workers on these platforms often focus on specific tasks or skills, much like the craftsmen and artisans of the Renaissance, leading to higher quality services and innovative solutions. Ethical considerations in economic activities, a key tenet of Aristotle's teachings, are increasingly becoming a focal point in today's business world. The rise of corporate social responsibility, CSR, and environmental, social and governance, ESG criteria, reflect a growing awareness that wealth accumulation should benefit the broader society and not just individual stakeholders. This echoes Aristotle's critique of wealth accumulation for its own sake and his advocacy for a balanced approach to wealth. Public markets and banking systems, inspired by the Greek agora, have evolved into complex financial ecosystems. The principles of Greek banking, including the use of loans and credit, are now manifested in modern financial technologies, or Fintech. Blockchain technology, for instance, offers decentralized and transparent financial transactions, reminiscent of the transparent commercial practices in ancient Greek markets. Moreover, the digital economy's reliance on innovation and continuous learning mirrors the Greek tradition of philosophical inquiry and intellectual growth. Online education platforms and collaborative workspaces are modern equivalents of the ancient Greek academies, where scholars gathered to exchange ideas and foster innovation. Focusing on the global financial giant, JP Chase, and its innovative use of blockchain technology. Blockchain technology, much like the transparent commercial practices of ancient Greek markets, emphasizes trust and transparency. JP Chase's blockchain platform Quorum exemplifies this principle. Quorum is designed to facilitate secure, transparent, and efficient financial transactions, echoing the Greek emphasis on ethical and transparent economic activity. Let's break this down with a specific example: the Interbank Information Network, EUN. This network, built on Quorum, allows banks to exchange information quickly and securely, reducing the time and cost associated with interbank transactions. In ancient Greece, the Agora served as a bustling hub where merchants and traders exchanged goods and information openly. Similarly, the 2N fosters an environment where financial institutions can collaborate transparently, enhancing trust and efficiency in global finance. Moreover, JP Chase's commitment to corporate social responsibility, CSR, and environmental, social, and governance, ESG, criteria reflects Aristotle's teachings on ethical economic practices. The bank's initiatives in sustainable finance, such as issuing green bonds to fund environmentally friendly projects, highlight a balanced approach to wealth accumulation that benefits society at large. In another example, consider the bank's investment in financial education and literacy programs. These initiatives are modern equivalents of the ancient Greek academies, where scholars gathered to exchange ideas and foster intellectual growth. By empowering individuals with financial knowledge, JP Chase is nurturing an informed and capable society, much like the Greeks did through their philosophical inquiries. In conclusion, JP Chase's innovative use of blockchain technology, commitment to ethical economic practices, and investment in financial education exemplify the enduring influence of ancient Greece's economic principles. By drawing inspiration from the past, this financial giant is navigating the complexities of the modern economy with wisdom and foresight. Thank you for joining us on this enlightening journey through history and economics. If you found this exploration of ancient principles in the modern world fascinating, don't forget to like, subscribe, and hit the notification bell for more thought-provoking content. Until next time, keep questioning, keep learning, and keep exploring the rich tapestry of history and its enduring impact on our lives. See you soon.